Welcome to our presentation on the Malaysia exchange rate. In this video, we will explore what exchange rates are, the factor affecting Malaysia exchange rate, its impact on the economy and the current trends. What is the exchange rate? The exchange rate is how much one currency is worth compared to another. In Malaysia, the currency is the Malaysian ringgit (MYR). Since Malaysia has a flexible exchange rate system, the value of the ringgit can go up or down based on various factors. How exchange rates change affect decision. First, buying and selling. When the ringgit gets stronger, imported goods become cheaper, while Malaysian export may become more expensive for other countries. This can lead people to buy more imported product, and business might adjust their production to respond to this change. Conversely, if the ringgit gets weaker, export might become cheaper and more attractive to foreign buyers, which could boost sales for Malaysian companies.
What happened in 2022? In 2022, a significant event affected the exchange rate. The US Federal Reserve raised its interest rate sharply by 425 basis points to control inflation. Here's how that affected Malaysians. First, global impacts. Higher interest rate in the US made US investment more attractive, leading to a stronger US dollar. As a result, many other currencies, including the ringgit, depreciated against the dollar. This trend was not unique to Malaysia but was seen globally. Second, investor sentiment. How investors feel about risk in different countries also affect exchange rate. Factors like global event, economic news, and change in commodity price can shift investor confidence and lead to a currency fluctuation. Recent performance of the ringgit. Despite recent challenges, the Financial Market Committee (FMC) highlighted that the ringgit continues to outperform other regional currencies and maintain positive performance against the US dollar in 2023. Key observations include strong investor confidence. $1 billion is non-resident inflow into the bond market and $200 million into the equity market year to date. Second, active currency conversions. Resident investors and corporate consistently convert export proceeds, income and excess foreign currency to meet operational and investment needs. Exchange rate fluctuations. Depreciation trend. Despite its initial appreciations, by July 2015, the ringgit began to depreciate again, trading at RM3.80 per USD. On October 20, 2015, the ringgit hit a low of RM4.24 per USD. This decline raised concern among economists and investors about whether the currency might return to the critical low of RM4.72 since during the 1997 financial crisis. For stakeholders affected, policy makers need to monitor exchange rate trend closely to inform monetary and fiscal policy. It's to balancing stability with economic growth remain for a key challenge.
The Malaysian economy. The Asian financial crisis of the late 1990s led to significant volatility in the Malaysian currency. To address this, Malaysia Central Bank, Bank Negara, pledged the ringgit to the US dollar at a fixed rate of 3.18 in 1998. Additionally, trading the ringgit outside Malaysia was prohibited to control capital outflows. This pledge remained in place until 2005 when the Bank Negara reverted to a floating exchange rate system after the People's Bank of China removed its pledge on the renminbi. Consequently, the ringgit appreciated against the US dollar, Hong Kong dollar, and Chinese renminbi. Factor influencing the ringgit value. The value of the Malaysian ringgit is influenced by various factors, including emerging market trends and political development within Malaysia. It is also correlated with commodity prices, as Malaysia is a significant exporter of oil and natural gas. Offshore trading of the ringgit is limited with non-debt deliverable for being traded by banks without an offshore presence. To remain control over its currency, the negara began cracking down on this trade in 2016. Despite these measures, the ringgit remains non-tradable offshore. Key Malaysian exports. Malaysia is a leading exporter of commodities such as palm oil, rubber, timber, crude oil, refined petroleum, and natural gas. This export plays a critical role in influencing the value of the ringgit, making it sensitive to change in global commodity prices.
Economic growth and structure. Malaysia is considered a middle-income country with a per capita GDP of about 9,650 United States dollar in 2017. The country has grown rapidly by attracting foreign investments and focusing on industries that export goods. This growth has helped reduce poverty from 49.3% in 1970 to only 0.6% in 2014. However, some people believe Malaysia is stuck in a middle-income trap, meaning it hasn't advanced much beyond its current status since 1992. Gross Domestic Products (GDP) measures the total value of all goods and services produced within a country over a specific period. It encompasses components such as government spending, business investment, consumer expenditures, and export. Studies have highlighted the relationship between key macroeconomic variables and their impact on exchange rates, indicating that GDP can influence currency value. While economic growth emerged as a crucial factor contributing to exchange rate fluctuations, the connection between GDP and foreign exchange rate is more pronounced over the long term. In the short term, GDP and income rates exhibit a weak and indirect relationship. Unemployment and exchange rate. Surprisingly, the analysis revealed that unemployment rates had an insignificant relationship with exchange rate volatility. This suggests that fluctuation in the job market may not directly influence currency stability for affecting currency value. The study found it has an insignificant direct relationship when controlled for GDP and unemployment. However, when considered alongside GDP, inflation does appear to have a significant effect, highlighting the complex interplay of these economic indicators. Explanation for exchange rate effects. Potential reason for the exchange rate impact is hold-up effect. This effect occurs when foreign investors delay or limit their investment decisions due to uncertainty or risk related to exchange rate fluctuations. If investors perceive that the local currency may depreciate significantly, they might hesitate to invest. This can lead to a reduction in foreign direct investment inflow, which could stifle economic growth. Exchange rate volatility significantly affects export performance in various ways. First, it introduces uncertainty for exporters, complicating revenue forecasting and hindering effective planning for production and investment. Second, rapid fluctuation in exchange rate can impact export competitiveness by changing product price in global markets, thereby influencing demand and market share. Finally, such volatility affects exporters' profitability, especially for those lacking foreign currency hedge, as it alters the value of export earning and raises the cost of imported input. Critical role of FDI in driving Malaysia's economic growth over the long term. First, long-run relationship. Co-integration evidence. The study found strong evidence of a long-run co-integration relationship between exchange rates, foreign direct investment, FDI, and economic growth. This means that, despite short-term fluctuation, these variables move together over the long term. Recommendations for policymakers. First, focus on GDP growth. To stabilize the ringgit, Malaysia should prioritize strategies that promote economic growth, such as enhancing productivity, attracting foreign investments, and supporting key industries. Secondly, control inflation. Maintaining low and stable inflation is crucial for preserving the value of the ringgit. Policymakers must effectively monitor inflationary pressures and implement measures to keep price increase in check. Thirdly, enhance economic diversification. Reducing reliance on specific sectors such as commodities, can mitigate vulnerability to external shocks and stabilize the economy, thereby supporting more stable exchange rate. In conclusion, understanding Malaysia's exchange rate dynamics is essential for economic planning. By addressing the factors affecting the ringgit and implementing sound policies, Malaysia can achieve greater economic stability and growth. Thank you for watching.